Hi, good morning. My name is Andrew Metrick. I'm a finance professor at the Yale School of Management, and I am going to be the moderator for our webinar on what's next for the Eurozone. Before we get started, let me just introduce our panelists, and hopefully I will be able to say these beautiful sounding names properly. We have Kyriakos Sabatakakis, who is the Managing Director of Southeastern Europe for Accenture. We have Mary Tanner, who is the Senior Managing Director of Evolution Life Science Partners. And we have Stavros Tamadakis, who is the Chairman of the Board at the University of Aegean and a member of the Hellenic Council for Corporate Governance. What we're going to do here is I have a few questions for the panelists to get us started, but we really want to hear from our webinar participants. So please look at the screen. You'll see a comment box, I think at the lower part of your screen, I'm told, and you can type questions into that. I will be constantly monitoring these questions and then parceling them out to our panelists. We have a wide range of expertise on this panel to talk about various issues in the Eurozone, and so I hope you'll take advantage of that by asking some good questions. I'm going to start by giving each panelist an opportunity to talk about to just introduce themselves and talk about some thoughts they have on the Eurozone crisis and how that relates to what they see in their own careers. I'm not giving long bios for our panelists because I think it's better that you hear from them than hear a long time from me, but I hope everyone did have a chance to look at those bios when you registered for the webinar. So without further ado, we will start off by going alphabetically. And Kyriakos, you're off first.
Thank you very much, Andrew. Greetings from Athens, and thanks for the invitation. So my name is Kyriakos Sabatakakis. I'm a managing director of Accenture in Southeast Europe. So I deal basically with the business community in Greece, but also in the neighboring countries, spanning from Romania all the way down to Cyprus. So I do have a pretty broad visibility in all the industries active in the region. Regarding the Eurozone crisis, I wanted to start off with some qualitative aspects regarding it. First of all, it's important to realize that the crisis in Greece was an outright sovereign debt crisis as opposed to a banking crisis that became a sovereign debt crisis in other countries that face similar issues as in Ireland or Spain. And this came after having gone through an age of innocence. This is what I call an age of innocence in the Eurozone. For a number of years, nothing was really happening, and then all of a sudden we had a huge crisis. I just wanted to highlight 3 points that I think we realized living through that crisis. First of all, the first thing was that political reaction time and market reaction time are not the same. And we realized this in a tough way in Europe because political decision-making was very slow. While the markets were going wild, the yields of the government bonds were skyrocketing. And obviously, ministerial meetings after ministerial meetings were not producing the rapid reaction that was required. So that was point number one. Second point was that we all realized collectively in Greece, in Europe, and the rest of the world, that there was a lack of joint liability over debt. This was obviously not explicitly stated somewhere that was supposed to be this way, but implicitly, also the investors assumed that there was some kind of mutual liability, which was not there. Before the crisis, you had the phenomenon where the yields of the Greek government bonds were quite similar to the German ones. Whereas right after the crisis started, you had a very divergent path. So, we learned something new ourselves about, how the Eurozone was functioning. And third point, we realized that there was an urgent need for more coordinated fiscal governance, that the Eurozone construct wouldn't hold for too long without it. And, all this whole dysfunctional sort of behavior was not helping the cause of the euro. So as you know, there were a number of support mechanisms that were created, and I have to say here that the EU should have acted already earlier, having seen what happened after the collapse of the Lehman Brothers, where the European Union and the Eurozone realized that there's no European rating agency, for example, for the first time. It was the first time there was a public debate around that topic. And last point I wanted to raise regarding the Eurozone crisis, specifically regarding Greece, and specifically this past year and the turmoil that we experienced in Greece with the capital controls. It was very interesting to observe very different behaviors of what you'd normally expect. Basically, capital controls were imposed in Greece to stem the outflow of capital in July. And right before that, because people were sensing that something was going to happen, either there was going to be some type of bail-in with the banks and people would lose their deposit, or there would be a possible new currency, they were actually trying to spend as much as they could. So you actually had a spike in consumption in June. People were buying durable goods, they were buying cars. So it was a very interesting phenomenon to observe. And everybody was trying to settle one's obligations, either in terms of taxes or companies trying to close their payables as quickly as possible to get rid of the cash that they had in the banks. So that was an impressive side effect of the crisis that we experienced in Greece.
Thank you very much, Kyriakos. Mary, you're up next.
Well, sometimes, Andrew, I feel, and colleagues, I feel like I'm having out-of-body experience when I get on the phone about the EU, in the sense that my professional life has covered science-based industries, life sciences, pharmaceuticals, biotechnology, software, healthcare, and I've been doing that for a long time now. Europe has woefully lagged other parts of the world in new company formation, entrepreneurial company formation, for a lot of, I think, cultural factors, some related to the way European universities work rather than American, Chinese, and Japanese ones. But remarkably, for the last 3.5 years, Europe has undergone a renaissance in venture capital investment, in public investors buying stocks of very small entrepreneurial companies. So, for example, despite the low growth world in Europe, last year it was the largest number of initial public offerings in biotech companies in Europe for almost a decade. Same thing on the number of European companies that actually were able to come public directly in the United States on NASDAQ, rather than any dual listing, which has some very profound valuation and capital formation benefits for them. And there was an enormous amount of public offerings by existing companies, about 120 deals and about $8 billion raised. Now you can ask why. Well, one thing is that while structural reorganization in industry in Europe may not be proceeding at the pace that some macro analysts would like, it's been proceeding in technology and life sciences because those are global companies and they're therefore exposed to the same pressures as Americans. So for example, the pharmaceutical industry has had a lot of mergers, a lot of people have been fired, probably 800,000 people worldwide. And for Europe, that was very beneficial because now there's a pool of experienced management who can become entrepreneurs, and you're beginning to see that flowering. So I sort of feel, in some ways, like I'm having an out-of-body experience when I talk to people about Europe, because in my world, there is very profound change going on for the first time in a very long time in Europe. And
the change that you're describing is actually quite positive.
Very positive.
So that's very interesting. I had not heard that before. Next, Stavros.
Yes, thank you. It's good to be last in introductory comments because a lot of good points have been covered by the other colleagues. Let me just add from the Greek perspective that, of course, the Greek crisis appeared as a fiscal crisis, but it was also underlined by a balance of payments crisis, a great trade imbalance that had been building up over quite some time, and which contributed to this inability of Greece to fund itself. Essentially, the crisis in Greece was a funding and is a funding crisis. It cannot find external funding, hence the European program. So the first is that there is an international trade aspect, balance payments aspect to this. The second is that Greece, although it was an outlier, it was not a unique case because, of course, there is a lot of tension within the Eurozone on a north-south axis, if you will. And therefore, by throwing Greece out or by having Brexit, you do not really resolve the problems of Europe or of the Eurozone. That's my view. My third point is that the Eurozone was really unprepared in terms of facing a crisis like this, which was for the Eurozone as a whole, a sovereign debt crisis, but also a banking crisis. These two were tied together very much. And what ended up being a big problem is, of course, very unruly, sudden, and uncoordinated capital flows. You had a huge amount of capital outflow from the south to the north of Europe, and that has played a big role in destabilizing the pre-existing Eurozone mechanisms. So, where we are now, Greece now is teetering at the margin. It's stayed in the Eurozone, but it still has to manage quite a harsh austerity budget, an austerity program. It has to stay on fiscal discipline. And I don't see the possibility of much internal stimulus in the Greek economy for growth takeoff. Stimulus must be external, either from exports, from tourism, or from new ventures which are export-oriented. Let me finish by making one last comment. The whole of the European experiment was based on these basic freedoms of free capital movement and free movement of labor. And both are being challenged now, because on both fronts, you have had unruly, sudden, and uncoordinated movements. In one case, because of the capital flows I mentioned. In another case, because of the migrant flows, which, by the way, place under stress not just the Eurozone, but the whole European Union, countries outside the Eurozone, clearly. So I would just like to say these from my perspective. One point that goes to what Mary was suggesting, this spirit of something new happening in the capital markets in Europe, which is true. Unfortunately, Greece and the Greek capital market does not partake in that at all. I would wait from other speakers who know things more in detail than I to say something about that. But in my perception, the Greek capital market is very depressed because there is no domestic saving, and because there is a banking problem, and because there are no significant capital inflows into the economy. So without these pillars, the capital market cannot really rejuvenate itself. A few things about myself. I'm a financial economist myself, having taught for regulatory financial markets in Greece and in Europe. So capital markets and capital flows and banking are quite an area of interest for me. So I'll stop here.
Okay, thank you, Stavros. We're open for questions at this point. So if people, if any of our webinar participants have questions, please type them in so we can start giving out some good ones to our panelists. I do have my own, but I'm sure yours will be better. So if you don't want to have to listen to my questions, please send in your own. And what I'd like to do is keep you on the spot, Stavros, as our first answerer of the next question. And you and Mary have both done a good job of taking us through kind of recent history up to the present time. I want to focus on the present time, and maybe you've answered some of this already and don't have that much to add, but if you do, please do, which is, what is the impact of the Eurozone crisis on the overall investment and economic climate in Europe today, right now? So what coming out of the variety of things that have gone on in the last 6 years, 7 years, and looking forward, what kind of advice would you give to investors or to citizens of the Eurozone who are trying to get a sense for what will happen next?
I think that Europe has been stagnant for quite some time in terms of capital market initiatives. Things are indeed reviving, and of course the European authorities, the European Commission, is undertaking this big new capital market union initiative, hopefully to spur new ways for funding new firms and small and medium enterprises. So I see that there are green shoots there. There are things that are turning positive in Europe. But I think this is still a marginal phenomenon. The overall picture in terms of the economic status is one that looks more like stagnation rather than rapid and dynamic growth. But the green shoots, of course, are there. And as I said before, I just hope that we can have an encouragement of green shoots in Greece too, which is quite segmented out of this so far.
Thank you. That's from that view, from right inside the country and a macro view to a more micro view, as you're our official outsider, Mary. You and me on the panel. What is you talked about how the last 3 years have been unusually dynamic overall in Europe, and keep the focus broadly on Europe. What do you see going forward? Now, as you look out, has this led to any different way of doing business there, specifically in your part of the business?
Well, I work on a industry, healthcare, life sciences, broadly defined, that's quite large, but overall not a driver of macroeconomic activity. To some extent, what happened in Europe was an echo boom of what's gone on here in the United States, the very ebullient stock market environment for technology, biotech, life sciences. Why? Because in a very low interest rate environment, if you want growth and you want alpha, what are you going to buy? What industries have any kind of positive unit growth rate except those that are science-driven, which promise transformational change? So our markets began to rally for technology about 3 years ago. To some extent, what has happened in Europe is an echo boom. I'm on the board of a company in France, which came public this year. There haven't been a lot of public offerings until recently this year in France for these kind of companies. Valuations are much lower in Europe. I think the question of how many investors there are that really want alpha kind of assets is an open question. And of course, it depends on continuing performance in markets. But there is a broad-based view by investors worldwide who look at the few companies that can be investable in science and technology industries in Europe, that valuations are much, much lower there than they are in the United States or China. And that's a big driver. You know, we have global investors now, genuinely. There used to be a lot of noise about that, and it wasn't really true, but we do have global investors now.
Thank you. Kyriakos, anything to add?
Regarding Europe overall, I echo what Stavros said before. Just another point to add to the broader picture. I've been impressed by the resilience of the euro during the peak of the crisis. We've seen the euro getting hit the last 12 months, more or less, but this does not directly relate to the Greek crisis. I guess it has more to do with quantitative easing and interest rates on both sides of the Atlantic rather than the Greek crisis per se. So this is one observation. The other is specifically regarding Greece. As I mentioned before, we're under a state of capital controls, and we expect that if things roll out smoothly, to get back to normality to a larger, to a smaller extent, sometime in 2016, that would help the investment climate a lot. On the other side, it is interesting to note that the banking sector recapitalization that took place only last week was heavily invested by the foreign capital. So practically the majority of the Greek banking system now belongs to foreign owners, if you like, which is a certain vote of confidence. But the other interesting side effect of this is that the foreign capital that came into the banking system will most likely help accelerate the return to profitability, both of the banks and their portfolios, meaning that we would expect also financially viable companies that were not able to get any funding up until now to probably start getting some funding and get back to normality. Having said this, there are a number of sectors in Greece that have been traditionally strong, and there's some new ones coming up. I think shipping is known the world over. Greece is a shipping superpower. It controls the largest commercial fleet in the world. There's more than 1,000 shipping families in Greece. So this is a major global industry out of Greece that is thriving, and we expect that to continue as it has done for many decades. Tourism as well. It keeps growing despite the crisis, or maybe because of. It's been growing quite a lot. The energy sector is starting to pick up. We hear about the construction of various gas pipelines and some promising gas and oil exploration. And last but not least, the tech startup scene has started to pick up in Greece. It was practically non-existent before the crisis, but many people realized that they need to take their own fate in their own hands and start doing stuff. And we see now a lot of activity around tech startups.
Thank you. We've gotten several very good questions from participants, so I'd like to turn to some of those questions now. And since we're on this topic of tech startups, actually, there's a lot of interest in this. We have two related questions. I would say one is from Tala Ibrahim, who asks, as someone from the power generation industry, I'm seeing job cuts in Europe and people losing jobs in the Eurozone. Mary mentioned that new entrepreneurs are entering the market. Which industries would be the ones to look out for, where the entrepreneurs would be more focused on? And I would say, in the same ballpark question from Merrick Tien, a question relating to earlier comments on startups, clean tech or green tech sometimes has greater adoption in Western Europe and the US. Clean tech companies and workers to survive seek customers, employers, and investors in both regions. What are some of the actions to encourage that cross-border activity, and do you think governments and trade groups in Europe will do them? So, Mary, I would let you take a crack at these related questions, and then see if either of our other panelists want to chime in.
Sure. So, where to look for growth and therefore career growth? You have to look in industries that are growing, and those would be mobile, they would be software. One of the hottest areas right now for new company formation is security software in the United States. Biotech, but you do need a science degree in biology and molecular biology for that in the main. On clean tech, Germany has done a remarkable job in not only closing down its nuclear industry, but in substituting a very large part of its utility power to clean tech. But I'd point out that it only works if there are government mandates that force that. Really aren't any clean tech technologies that are cheaper than the way we make our electricity worldwide, especially with the collapse of oil prices. So if it's clean tech, we need government mandates, or it won't happen. Not on any normal economic basis.
Thank you. Stavros or Kyriakos, thoughts?
Well, I would add a little bit to, again, from the perspective of Greece, that as Kyriakos mentioned, there are several sectors where there are prospective opportunities. I would think that one other sector that was not mentioned is infrastructures. Greece is going through a privatization program of several infrastructures like airports and harbors. And this is an area where services, transport services especially, can be a growth area. And I believe that this is something that can affect the whole of Europe, by the way. Europe And the Eurozone, more specifically, is lacking in infrastructure. There is considerable opportunities for pan-European infrastructures that will fortify the unified market. So, but Greece specifically has this infrastructure sector, which could be an important prospect.
So, Kyriakos, I think you probably see this in a lot of different places in your work. Is your sense, broadly from the Euro-wide perspective, that there are a lot of opportunities in these technological fields?
There are opportunities. Obviously, as we said, the startup scene is relatively recent in Greece, so it does have some way to go. Just to chime in, I would add, in addition to clean tech, which also for reasons of natural resources like sun and wind in Greece, could help develop, further these technologies. I would add innovation in agriculture, in nanotech, in pharma, and as Mary also said, software and mobile is pretty big as well. So these are sectors that are developing, but nevertheless, the sectors that I mentioned before are the traditionally big sectors of the economy that are going to start pulling the economy, I think, out of the recession.
Yes, thank you. We have a question from an anonymous viewer, which is very to the point, which is, how do we know we will hit bottom? How do we know when we've hit bottom in the Greece crisis? So what will be the sign that tells us, okay, the bottom has been hit and now we're climbing back up again? And Mary, you're not off the hook on this, because there was another question specifically from one of our participants directed to you on exactly this question, saying, as an outsider, how do you look at that? How do you decide? How do you think, when are we out of the woods? So all panelists, let's hear from you on that. We can start with anyone, but I guess let me throw it out to Stavros to start.
So far as Greece is concerned, I think that we have hit the bottom when last summer we were really quite on the brink of leaving the Eurozone. Now this is behind us. And we've also hit the bottom because in the bank recapitalization that just happened, and it was successful, bank prices, the prices of bank stocks have really hit bottom. They have gone tremendously. They're very low prices. And I would say, in part, the success of the recapitalization has been because the prices have been very low. So the indications are that we have, on a number of fronts, turned a corner, hit the bottom. The risks faced by Greece now, in my opinion, are not so much macroeconomic risks, because despite all the noise, Greece is now on fiscal balance. It does not have a sovereign. It has a debt problem, but doesn't have a fiscal problem. The risk Greece is facing now is mostly geopolitical. I think that's where things might happen, which we cannot predict. And it's not only the refugees, it's everything else that's happening in the region. So I would say that there is a movement from macroeconomic risks to geopolitical risks as major issues on the agenda. And that, of course, goes for Europe as a whole, but the immediate problem for Greece is higher.
Kyriakos.
Yeah, if I may add something to this, I think what we experienced last July was the peak of the Greek drama. We were on the brink of financial collapse at the time. Given the fact that both our European partners and the Greek government caved in to find an agreement, it's a very positive indicator that should something strange happen in the future, they're going to find an agreement again. Let me remind that for the last years during the crisis, Greece has been governed by pretty much most of the parties in the political spectrum from the right to the left. This means that all parties now have come to accept the terms of agreement with our European partners. So I would say from a macro perspective, I fully agree with Stavros that now we're facing more geopolitical issues, not only in Greece, but in Europe as well. And I would say, guaranteeing that we're going to be having political stability, regardless of which party is going to be in power, is the number one criterion for making sure that we're not going to be hitting another bottom. So having said this, I think now the importance of the crisis is shifting to other factors that have to do with a refugee crisis that is actually impacting other European institutions, how they function, and this is something we're going to have to deal with, immediately. There's no time to lose again. This is another crisis for which Europe is not prepared. So the resolution mechanisms need to be there very, very quickly. Otherwise, we're going to be facing new challenges.
So let's stay on that for the moment, and Mary, allow you to broaden your answer from just plain Grexit to consider more broadly what the challenges are to the Eurozone, specifically the refugee crisis. How do you see that? How do you see the geopolitical risks to the Eurozone? Assess the likelihood of the current institutions continuing in their form that they're in?
Well, I don't know. I haven't thought about existing institutions, but it seems to me the great risk right now is the Schengen zone more than the euro. I mean, it is a fact of history that no currency union has ever survived long without fiscal and taxation unity. But let's leave that aside for the moment, because the real risk now with millions of people crossing through Greece and other places is Schengen. That could have very profound economic effects because there have clearly been macro benefits from free movement of goods, if not so clearly with people. As an investor, and that is really a scary thing to contemplate. I now read European newspapers quite attentively regarding what elections are coming and the Le Pen phenomenon, when is Portugal's election, what about Spain, what about the Greek coalition? It used to be that I read that so as to be polite when I sit on European boards of directors and hang out with my European friends. But now I read it as one of many investment indicia, because it actually, Greece taught us as investors that government is truly by the people. And governments can take radical positions. It used to be whoever got elected, there were marginal differences in the investment climate for investors. It was more of a currency question. But now we're talking about potentially quite dramatic differences as people go through this kind of stress. And so I don't know that we're out of Greece, because I don't know that the Greek government will survive. And I don't know if it doesn't survive, what that means. So sorry about that. And, I'm looking forward also, I'm sorry to tell you all, my colleagues from Greece, for a parity party. Now, when the euro was first installed, at one point it nearly reached, and so did the pound, 1 to the dollar. And it looks like it's heading there again to be. So I welcome you all to my house in New York for a parity party of the euro.
Thank you. Thank you, Mary. Let's stay on this topic, this kind of broad topic of challenges to the overall Eurozone. And in addition to the refugee crisis, you mentioned, Mary, at the start, the issue of fiscal union. So let's keep these ideas in mind, and specifically let me ask the question that was posed by Brian Sang. Some of the panelists have talked about the economic disparity that exists in the Eurozone, for example, Germany. Where do they see this disparity going? How can the Eurozone become a more uniform bloc if they continue to have a unified monetary policy, but divergent fiscal policies? What does that mean for future business activities? And I want to shift over back to you, Stavros, to take the first crack at this.
Okay, this is really not an easy question. But let me try my best. First of all, let me say about Greece in response to something that Mary just mentioned, that it is remarkable that despite the crisis of over the last 5 years or 6 years, despite a decline in income of about 25% in Greece, despite the huge unemployment, despite all the political changes and upsets, and a considerable amount of populism in Greek politics, a very large percentage of Greeks are still pro-Euro, a very large percentage. And that is remarkable, the resilience of the pro-Euro view of the Greek voters. And I think that this is a stabilizing factor in Greek politics, irrespective of what happens to specific governments and parliamentary majorities.
Why do you think that is? Why would it be that still the Greek people are so pro-Euro when clearly it's causing a lot of problems?
I think, but that's my own assessment, it's because it gives them a sense of security to remain in the Eurozone. And that sense of security is becoming stronger and stronger as the geopolitical risks in the region are growing. It would have really been a disaster if Greece had left the Euro and you had the situation in the Middle East as you have it now. It would really have been a disaster. Greece being a small country and neighboring, having a lot of dangerous people in the neighborhood. So I think that that's a remarkable factor. Now, Eurozone as a whole. Indeed, there is a rise in some places of populist nationalism. I think others have mentioned this. But I'm not persuaded, the way I observe politics around the Eurozone and Europe in general, I'm not persuaded that the rise of nationalists and populists are a dominant trait right now. It seems to me that there is a motion to the center. Spain is a good example, where the left for a while was really running very much ahead, but the public opinion in view of their upcoming election has now seemed to be moving more to the center again. So I do not see a clear trend towards populism, because populism and nationalism would mean, in the end, very quick fragmentation of the Eurozone. Now, it seems to me that there are two fronts. There is indeed the front of those who want to go back to nationalist policies. Madame Le Pen in France wants to leave the Euro directly, I mean, openly. So there is that front, clearly. I think that the other front, which looks for further integration, for not just fiscal union, but for some sort of political union in the Eurozone, is the front that should be opened, that should be pressed by the Europeanists in the various sectors of European public opinion. So that is the big political challenge, in my view, but it's not a lost battle at all.
Thank you. Kyriakos, thoughts?
Yeah, if I may add a couple of things. I think despite all the issues in the Eurozone, at least we learn what are the deficiencies of the system that we're in. Obviously, currency and exchange rates, are not a lever anymore in the economies of the countries involved, and Greece has learned this the harsh way. By the way, there was never really a public debate around the merits of entering the euro in the first place. I think, just as Stavros said before, Greece entered mostly for geopolitical reasons, not because it had really analyzed in detail the impact of a euro entry. Nevertheless, this is where Greece is now, and the euro, I think, one way or another, is going to move ahead. Obviously, as the person who asked the question, we have different tax rates in Europe, and there is tax competition. And I think this is on the radar screen of the European Commission to try to see how to soften this or how to change this. But at any rate, you have things like the banking union going ahead. You had some elements of quantitative easing taking place, albeit with a lot of infighting in the ECB, because there are different philosophies and different opinions around that. And I think one way or another, we're going to see more coordinated fiscal policy going forward. Obviously, if we're going to be having some cataclysmic events, whether coming from the refugee crisis or even from events slightly outside of the Eurozone, like a potential Brexit, so Britain exiting the European Union, this could have an effect that would be difficult to assess right now.
Thank you. Mary, you got us started on this issue about fiscal union, and it sounded to me like you had some more thoughts on it, but we're holding back so you could answer the question that I had posed to you.
Andrew, I'm not enough of an economist to give a historical survey of currency unions and why they did or didn't work, although it is actually quite interesting economic history reading to do so. I think you've got a lot of problems. Differing tax rates is an issue. You know, Ireland and countries that have truly benefited from low tax rates are not going to give up easily. Now, I think you have one thing going for the EU over the next maybe 2 years, and ironically, it is the refugee crisis, because you can bet the EU will not be able to hold countries to fiscal targets, classic fiscal targets. I mean, Germany's already put together a exception to their budget for that. So there'll be a little bit looser environment in which differing economies can kind of chug along and hopefully improve themselves. I do think there is structural change going on in European industry and in some ways in European society that will make labor market changes easier. And I think in a funny way, unless the refugee crisis results in terrorism or some dramatic event like that, it probably takes the heat off the differing fiscal problems of European countries for a while.
Thank you. We have another question from one of our participants, Tala Ibrahim, in a follow-up for Professor Stavros, asks that points out that Greeks. That you did point out that Greeks want to be, and it's still the case in polls that we hear, they want to remain in the Eurozone, and security you mentioned as an important reason. But she goes on to ask, and I've also heard this, that in conversations with Greeks, we understand that Greece has become uncompetitive in comparison with other Eurozone economies due to the higher cost of labor in sync with other economies in the bloc. If Greece exits the Eurozone, would it not be the case that Greece would be able to work at lower labor rates and become competitive? So let me just add to that a bit. When the euro was created and at that time, it was a strange time, still coming off a strange time in Germany. And I think is the consensus of economists that the original place that we ended up is probably not where we should have ended up. In terms of the relative labor rates and productivities between the various countries in the Eurozone. So is it the case, did we start in the wrong place so that now it's very hard to get out of it without some kind of crushing deflation? Is there some other way that Greece can become competitive?
Well, that's a very good question. But let me point out that over the last 5 years, under austerity policies, labor compensation in Greece has gone down by more than a quarter, by about 25%. So I would say that so far as labor cost, unit labor cost is concerned, there has been a considerable adjustment. However, in my opinion, this is almost proof that just low labor cost or just low interest rates in Europe do not constitute a sufficient condition, a guarantee for either investment to take place or for export to take place and for competitiveness in the broader sense. You need other things. Some of those have to do, of course, with institutions and with taxes. Some of those have to do with the efficiency of banks and the ability of firms to get funded. There are a lot of good firms in Greece which simply cannot export and develop because they have no funding. So the budget constraint, the funding constraint rather, is very significant. And I've been arguing all these years that you may, in fact, drive labor costs down through policies of austerity and so forth. But at the same time, the cost of capital in Greece has shot up. And that is a very effective barrier to competitiveness, to exports, to even what Mary was talking about, upstarts and so on. So the high cost of capital is the problem, rather than the low cost of labor at this point. Labor has, by and large, adjusted.
Thank you. Kyriakos, would you like to add to that?
Yes, please. It is true that competitiveness in Greece is not very high, and there's an oxymoron here because Greeks work the most compared to any other European. So if you add up hours worked per year, Greece ranks #1, above Germany, above any other country. So this means there's a big productivity issue relating to that. Wages have indeed come down significantly. And I think the one thing that is in favor of Greece and the Greek labor market is the fact that there's a lot of educated people in Greece. The level of education is pretty high. You have a lot of people with degrees. Actually, the sad thing is that in terms of the unemployed, there's a large percentage of the unemployed with university degrees, the highest in Europe, I believe. However, this means that the ground is there, that once the economy gets started, that once, these issues are straightened out, that there would be, a local primary source of skilled people to start working, possibly in the knowledge society, where you don't necessarily need huge investments. So I think this is a kind of a mental switch that needs to take place here in the local market.
Thank you. I want to move next to some questions that are we like to call them SOME. They're very similar to the School of Management type themes that we talk about a lot here on campus. And one came in that's really perfect for this from Lori Goodman, and we think about this a lot here, which is what's the role of NGOs, nonprofits, and philanthropy in the future of the Eurozone? So we've been talking a lot really about the private sector and the government sector, but we have these other players that are important players in many parts of the world. I don't know if you have thoughts about what the NGOs, nonprofits, and philanthropy could be doing for the future of the Eurozone. And I'll maybe start on the spot with Mary.
Okay, well, the first and most urgent thing is Europe's got to think about how it's going to assimilate all these thousands of refugees. It's not simply a German issue. Europe has always been very government funding oriented. The arts are principally funded still in Europe by governments. And that hasn't been true here in the United States ever, except for our always controversial National Endowment for the Arts, which manages to get negative headlines no matter who's in office. So I think that's a real opportunity, especially since, while there will be flexibility in European fiscal rules with that crisis, that's another opportunity. NGOs are also very helpful, frankly, for starting things up where you can't find investors, because it is true the cost of capital in Europe for startups is still much higher than in the United States. So those would be two thoughts.
Thank you. Stavros.
Let me make a small remark, or rather two small remarks on this from, again, the Greek perspective. NGOs played and are playing a big role in assisting the migrants that come in from Turkey, because the number of people has been overwhelming and the needs are overwhelming, and the government cannot handle it. So there is a valuable contribution there by non-government institutions and philanthropic institutions, who I think are also acquiring very valuable experience in how to face this type of situation. That's one comment. And I think that Mary was right. Overall, there is a contribution to be made in the migrant crisis in Europe, not just in Greece. The other point I would like to point out is that I'm also chairman of the board of the University of the Aegean, a public university in Greece. And of course, public universities have become horribly underfunded now because most of their funding was from the public budget, and the public budget is being cut. So the university, this particular university, has suffered something like a 50% cut in its budget. And one of the things I'm a proponent of, and I'm trying to do, and many others are trying to do, is to turn the universities into non-profit independent entities that can raise funds from other sources, not just research, but essentially you must create foundations that will do this so that they can fill up the gap from public funding. But this means a whole strategic reorientation of the universities themselves, which have been, as I said, traditionally dependent on the public budget. So that's an interesting example.
That's a very interesting example for those of us in the higher education world. In the United States, we have many, even our nonprofit private universities receive an enormous amount of government support, of course, but most of that is through research and various indirect programs. Even our public universities in the United States tend to get less direct public funding than most of the top universities in Europe. So it would be interesting to see how to change that. It's almost a cultural change.
Yes,
that would be needed.
That's right.
Let me. Are there other thoughts on this particular question? I don't want to leave any of our panelists. Kyriakos, do you want to?
Just a couple of thoughts very quickly. I think in Greece we had a strange phenomenon that traditionally this is not a country when you had a lot of volunteers chiming in to do things. We had the first surge around the Olympics in 2004, and then it sort of tapered off. And then you had a reappearance of the phenomenon big time during the crisis. So you see a lot of people, helping each other, and this is good. I think this is good because it's bringing a sense of solidarity in the Greek society. That's point number one. Point number two is that we do have some prominent NGOs, some foundations, some private foundations like the Niarchos Foundation or the Bodosaki Foundation, who've been helping tremendously, both in providing the means for people to be able to survive, but also in running large projects like the Niarchos Foundation is building a $500 million new opera and new national library for Greece that is about to be completed. In the times of crisis, such investments are very, very welcome. And they're playing an indirect role in stimulating the economy. Last but not least, we've seen a lot of non-profits that have started to appear regarding the startup scene that I described before. So you have a lot of non-profits trying to provide the framework to support startups for absolutely no profit for themselves. And I think this is also a new wave that we're observing in Greek society.
Thank you. We have time for at least one more good question. And it really is a good one because it's quite broad. It's from John Mitchell, who asks, the lion's share of economic growth in the United States for a number of years has benefited a small share of the richest segment of our society. Do you expect that the reforms you all speak of and anticipate in Europe will have the same effect? That is, only the rich, or mostly the rich, will benefit from the growth induced, for example, by freer labor markets. So inequality, of course, gets a lot of press all over the world. We have a lot more discussion of it in the United States than I think we've had any time in my lifetime. And I don't know to what extent, since I'm not there, this is dominating the airwaves in Europe, or we're concerned about what some of these changes will do to inequality. So maybe we can start this time with Stavros, and then I'll go to Mary next. We'll let Kyriakos take a breath and go last on this one. So Stavros.
Inequality is indeed a very significant problem. I know there has been a lot of discussion here. lot of discussion in Europe as well. After all, the big inequality guru is a European, Frenchman. The crisis in Greece has produced a lot more inequality that existed before, because it has been shown by a number of studies that the income reductions were not across the board and equal. So crisis has increased inequality. Our present government, which is a government of the left, has, at least in rhetoric, suggested that they will try to do things to reduce this inequality. We haven't seen much of that yet, aside from shifting around tax brackets a little bit. But that is not really the best way to do this. I think that we have to remember that an increase in inequality in the end is a threat to democracy. Because I think that the tremendous concentration of wealth and economic power at the top brackets is a threat to democracy. And to some extent, I think that some of the populism we're seeing may be a sign of these things. So I would agree with, is it Mr. Mitchell who asked the question? I would agree that inequality has to be a policy parameter in whatever we do in macro terms or in meso terms or even in micro terms, because it is a very important parameter in terms of stability of society and democracy.
Thank you, Stavros. Mary, thoughts on this?
Well, for sure, increasing inequality is not a platform for the easy happiness of democracy. But I would remark that I think the reason there's so much focus on inequality, at least in the United States, as I perceive it, is that people don't think there's going to be enough growth for everyone to benefit. I mean, the number of people in the United States and Europe, in a recent poll I saw, I think it was from Pew, basically 58% of people in the United States think their children will not be better off than they were. Now, there's the problem, because when people don't think there's going to be enough to go around, then you can't share, and then your view on it becomes different. So I think there is a lot of bad public policy, particularly in the United States and also in Europe, that inhibits investment. And I think Europe's got a bigger problem than we do, simply because of the nature of its pension system and social network, which is government supported. You know, there are not that many corporate pension funds. There aren't 401k plans. You know, there is some extent to which, if an American has an account at Fidelity, a 401k account, they benefit from startups, from the rise in the stock market, from so forth. Perhaps they don't benefit as much as a hedge fund can. But I think that the problem is a very low growth world. And every macroeconomics newsletter I read says we're in a 1.5 to 2.5% growth world. And so this problem will persist, I think, because of the perception that our children will not be better off. America has never been a particularly selfish country. It loves the self-made. But now we've got a problem that there aren't enough self-mades.
Thank you. Kyriakos, you will get our last word on this topic.
Right. Inequality is a big topic in Greece, and inequality has definitely increased during the period of crisis. But I would have to say, not just in the traditional way, you know, the famous 1% owning, you know, a big share of the wealth in the country, but here is between those who have work and those who don't. It's a more fundamental difference and inequality, because families who had work for decades and you know, are left out of work, you know, their standard of living drops dramatically, and this is the biggest issue here in Greece. What did most Greeks do who were faced with this issue? Those who could have left the country. So we had 200,000 people, educated people, leaving the country the last few years. However, only to discover there's not much easier, somewhere else. It's a struggle, I think, across the board. And I think the positive thing is that Greeks love their country so much, and they love living in this country so much that I think as soon as things stabilize, as soon as the environment becomes a bit more stable, we're pretty sure that they're going to come back to help fuel the growth of this country.
Thank you, and it is delightful to end on an optimistic note when talking about Europe and Greece. And let me thank the panelists for a fantastic, lively, engaging discussion on a wide variety of topics, and our participants for sending in so many of those good questions that got us going. So thanks very much, and have a great afternoon.
Thanks.
Thank you very much.